Sometimes, as a husband and wife, you might want to form an LLC or form an S corporation or form a C corporation. But in today's conversation, I want to focus on how a husband and wife can form an LLC. If you are trying to form a business relationship with your significant other, then you want to watch this show from beginning to the end. So here's the overview I want you to pay attention to. So forming a husband and wife LLC can be a great way to organize your business, not just because you are trying to have, maybe let's say you have a common vision for a business that you want to launch, or sometimes for tax purposes also, it's kind of cool to have an LLC, but also filing jointly, okay? So when you start up any business, it's important to set it up correctly and understand the tax consequences involved. So let me first explain everything to you. So when we talk about getting started, to form an LLC, you need to actually think about naming your LLC, right? You need to name your LLC. You need to select a name that is not used by another business in your state. So the Secretary of State websites will generally link to the database where you can search names. And it's important because the last thing you want is to actually start fighting copyright issues or copyright court cases. So once you have chosen a name, you can start an LLC by designating a registered agent, a person or a company that is authorized to do business in your state. And the registered agent is the person who will receive legal notices such as service of process and tax forms on behalf of your LLC. Okay. And again, we're talking here about an LLC spouse company. You can designate yourself in some states, but it generally is best to choose a company that specializes in providing this service. So that's getting started. What about getting organized? So when your partner in marriage is also your partner in business, it's important to understand that you have choices when setting up your company. A limited liability company can be a great way to organize your business. Again, the thing is that when we talk about LLC, just remember that if you are trying to go in business with your wife or husband, you are able to also create an S corporation, a partnership, an LLP, a C corporation. So you have a lot of options. The thing here is that setting up an LLC with a spouse is one of the easier and more flexible entities you can establish. And forming an LLC as a married couple follows the same steps as forming an LLC with any other partner in the business. Because at the end of the day, your partner, your significant other is a business partner. And so then that partner, chances are maybe, you might actually have disagreements or agreements in the future. Stuff happens. So you want to look at things from a legal point of view, okay? We want to really put aside all the thing about lovey-dovey, love thing. No. You want to focus on the legal aspect of things and the operational aspect of things. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. So as we are going through the overview of a husband and wife LLC here, so I talked to you about getting started. Now we have talked about getting organized. Now let's talk about let's really go a little bit into detail. See, if you decide an LLC is the right structure, sorry about that. If you decide an LLC is the right structure for your company, the first step is to really think about based on your niche, based on your sector, based on let's say the regulations in your sector. What are the things you need to really pay attention to? I spoke to you earlier about about naming the company. Yes, that's number one. The name is just one. But what about the regulations? What about the licenses? What about things that are inherent in the specific sector you're in? And when we talk about names, what are the customs, if you will? What is what is the best practice in your industry? There are certain industries where having a certain name is not really great for business. So you got to have a clear idea what's really happening here in your industry. And so what you want to do here is you have to go first. It's just a lot better to get in contact with the Chamber of Commerce in your area, in your county, in your city, in your state. You can contact also the Secretary of State to sort of go back to the naming thing that I talked about, but also all the other regulations that revolve around your company. So when we talk about, and this is also important for registered agent. Normally, If you are a husband and wife and you have an LLC, it's just a lot better to outsource the registered agent job. Do not do it yourself, because the last thing you want is to actually divulge your information, your relationships information. Because see, if you are a registered agent, your information will be public in a lot of states. So if anybody wants to inquire about your business, they'll be able to know you have your address, your first name, last name, all that kind of stuff. So for that reason, for reasons of privacy, and also to protect yourself and to protect yourself it's just a lot better to hire a registered agent. And you have a lot of them. You have a Northwest registered agent, you have InkFile, you have Zen Business, you have a lot of players who can actually do that job, not a problem. You also need to file a formation document with your states, typically called articles of organization, and pay a fee. So once your state accepts your articles of organization, you have officially formed an LLC owned by spouses. Boss, I want to quickly remind you of today's topic. We are having a conversation about how a husband and wife can form an LLC. I want to talk about operating agreement. I mean, you might be thinking, well, do we really need an operating agreement? We're already husband and wife. Yeah, you need an operating agreement. It doesn't matter. I mean, God forbid something happened tomorrow and you're no longer married and you still want to keep the business. You want to have an operating agreement, even if you're married, even if everything is fine, even if you're having a lovey-dovey relationship, romantically speaking. You still want to have, you want to monitor business and LLC practices from a regulatory point of view. Okay, with the best practices, you need to create an LLC operating agreement, which is basically a contract between you and your spouse that specifies how your LLC will be governed. So even though you are in business with your spouse, one of the most important things you can do is have an operating agreement drafted using an attorney. Okay, you really want to outsource this task to a third party, to a lawyer. This agreement will lay out the initial ownership structure and important details that will dictate different events, such as if one of the spouses no longer wants to be in the partnership, or the case of a divorce, or if one spouse were to pass away. You never know. In your operating agreement, you can indicate what percentage of ownership each of you will have. However, if you live in a community property state and decide to divorce, the court will decide the LLC equally. Okay, not decide, divide. So they will distribute the assets of the LLC equally. The operating agreement also includes how you plan to handle a company closure or what to do in case one person wants to buy out the other in the future. Keep in mind, though, that you can arrange ownership any way you like, and can even name just one spouse as the owner and designate the other as an employee. So the thing is, the laws are on your side. Income taxes and payroll taxes will need to be withheld for the employee spouse in that case. Also, you need to apply for an EIN. So no matter how ownership is set up, you will need to obtain an employer identification number through the Internal Revenue Service. Okay, so you go to the IRS website to hit that. So think of an EIN as a social security number for your LLC, for your couple LLC business. Okay, it identifies you for tax purposes and is needed to open a business bank account. So this is kind of cool. So there is no special EIN for married couples. From a tax perspective, whether it's a spouse or not, whose names are on the paperwork is what's important. The state views this as a partnership. Okay, very important to remember that. I want to talk about the tax implication. You need to understand the tax implication that we're talking about here. So because you are forming your LLC as spouses, you have some options when it comes to your LLC taxes. Income taxes from your LLC are based on your personal salary and profit from the business. And the thing here is that if you choose to set up your LLC with just one spouse as a member, you can classify as a sole proprietorship or a corporation. If your LLC has more than one member, you can classify as a partnership or corporation. Okay, so those are nuances you need to really think about. Now let's talk about partnerships. If you choose to identify yourselves as a partnership, you will pay tax personally on your income. Because you are married, The IRS allows you to divide each stream of income, expenses, and tax credits proportionate to your percentage of ownership in the LLC. What about C corporation or S corporation? You can actually choose to identify as either a C corporation or an S corporation. As a C corp, you also file your own tax returns. You also personally file taxes and pay taxes on your dividends, which are not tax deductible for the LLC. So you end up paying a double tax on that income once as the LLC and once as the member. And so that's if you go the C corporation route. It's called double taxation. And if you elect an S corporation, income is reported by the LLC that is passed through to you as owners. So you will report that income yourselves, but do not pay self-employment tax as a partnership would. So what will happen here is that, if you're an S corporation, you will have to file, basically you will receive Form 1120S, and that's the tax return of the S corporation, but that's an informational return. In other words, you don't pay taxes at the S corporation level, but you have to, so that whatever Schedule K1 you receive from that 1120S, you actually will, you will transfer income information from the K1, from the Schedule K1 to your Schedule C, Form 1040. Boss, I want to quickly remind you of today's topic. We are having a conversation about how a husband and wife can form an LLC. I want to also talk to you about a single member LLC. You can consider a single member LLC. Even if you are married, you can consider a single member LLC. Since the money earned from an LLC flows through 100% to your personal return where you and your spouse file jointly, it is sometimes easier to just form one of the partners in the marriage in a single member LLC. Another thing to consider is that when you have a partnership, the tax filing deadline is March 15th, not April 15th. And the penalties are higher if you do not file that tax return on time. So the thing here is that you got to be strategic, right? It's all about, you got to really think about the specific nuances of your relationship, of your marriage. Forming a business with a spouse provides potential tax saving opportunities. For example, both individuals may now be able to contribute more toward retirement. Some additional expenses can be deducted as business expenses. Also, forming a business with a spouse may open the door for the business to take advantage of several government programs aimed at helping protected classes of individuals. So this is kind of cool. So the bottom line here is what? Creating an LLC as a married couple gives you the opportunity to work together and leverage some tax flexibility. Make sure that you are if you have questions, it's just a lot better to to have a lawyer look at the whole thing. So bottom line is, do not be confused here. If you are a married couple, you can form a single member LLC. Okay, you can form a single member LLC because there are situations where a married couple can form a single member LLC, so that you are able to actually take advantage of the tax laws. But to do so, you must live in a community property state. You must also be okay with filing a joint tax return. Okay, so let's talk about the community property states. First of all, if you hear someone talking about a community property state, it's often in the context of divorce. For instance, a friend might tell you that since they live in a community property state, their ex-spouse gets half of the house. In those states, property acquired by either spouse during the marriage is legally considered joint property of the couple unless they have a prenuptial agreement that says otherwise. So let's talk about those states here. So you have Arizona, California, Idaho, Louisiana, Nevada, New Mexico, Texas, Washington State, and Wisconsin. Okay, so this is kind of important. So the community property designation only applies to assets acquired during the marriage. So if you form an LLC 6 months before your wedding, it is not community property. If you form one the week after the wedding, it is. You could even form an LLC at the reception, and bam, it's considered community property. So it's really something to think about. And what if your spouse and you don't live in a community property state but want to form an LLC together? Well, you can do that, but you will have to form a multi-member LLC, which means you'll get taxed as a partnership. And you also need to create a multi-member LLC operating agreement and agree on what percentage of membership interest each spouse will own. And if you decide to share the LLC equally, you will each get 50% membership interest. So those are things you need to really think about. Let's talk about how to form a married couple single member LLC. So let's say you and your spouse live in a community property state, right? So, and you want to run an LLC, and you have decided you want to be considered a single member LLC at tax time. There are a few other steps you must take to form an LLC, including, as I said earlier a few minutes ago, designating a registered agent, and also paying the fees that you need to pay, right? So there are a few things. So think about LLC, articles of organization, the operating agreement. You need to have those. Very important. The IRS tax requirements. Now, to file taxes as a married couple with a single member LLC, the IRS requires you to meet the following requirements. You and your spouse must be the only members of the LLC. Both spouses must participate in the business. Both spouses must opt to be taxed as a disregarded entity instead of a partnership. Okay, so this is actually called a qualified joint venture. So this is important to really think about. So in the eyes of the IRS, you are considered a qualified joint venture. So it's important. I'm going to repeat this trifecta of criteria. There are 3 criteria you need to actually simultaneously meet to qualify as a single member LLC in the eyes of the IRS. You and your spouse must be the only members of the LLC. Both spouses must participate in the business, and both spouses must opt to be taxed as a disregarded entity instead of being a partnership. So in other words, you're not filing Form 1120 S or 1120. You're not filing either Form 1065 for a partnership. Okay, so you're filing just you're filing a joint return, of course, with Schedule C, where you report your income. So those are really important, because the IRS is really adamant and making sure that those are really are adhered to. And one thing you need to make sure, please, I want to go back quickly to the operating agreement. This is an important element. You need to draft a single member LLC operating agreement so that you are in that document you list both you and your spouse as members. If you and your spouse have the same last name, write your names as Susie and Dan Smith, not Susie Smith and Dan Smith. Okay, and so this emphasizes that you are forming the LLC as a unit rather than as individuals. So those are things to really pay attention to. I want to quickly talk about the benefits of filing as a single member LLC, because there are obviously a lot of benefits. And so there are two main benefits for married couples filing as a single member LLC: easier tax filing and credit for self-employment taxes. A single member LLC is appealing in its simplicity because there's only one member, so the LLC gets taxed as a disregarded entity. That's a less complicated tax situation than multi-member LLCs, which get taxed as partnerships and require more paperwork. In a partnership, each partner must file their own Form 1065 and Form 1040, as well as issue a Schedule K1 1065 to themselves. In a single member LLC, they can file a joint Form 1040 plus separate Schedule C and Schedule SE 1040s. A married couple that files taxes as a single member LLC also sees another advantage: double the credit for self-employment taxes. Since partnership taxes are more complex than sole proprietorship taxes, many married couples who form an LLC together only list one spouse as the owner. However, in that case, only one spouse pays self-employment taxes and gets credit towards Social Security and Medicare when they retire. In a single-member LLC with both spouses listed as owners, both contribute individually to Social Security and Medicare, which means what? It means that both partners will receive credit for Social Security and Medicare benefits. This is kind of important. And so before I close to this conversation, I want to quickly compare and contrast LLCs versus qualified joint ventures. So a married couple single member LLC is similar to a qualified joint venture, which is basically an unincorporated business owned by a married couple that file taxes as a super partnership. So, so this is where the similarity really is pretty striking. And it is striking because both business types are taxed as disregarded entities. However, a qualified joint venture is a tax designation, not a legal entity. So having a qualified joint venture that is not incorporated doesn't provide you with the asset protection that you get with an LLC. With a qualified joint venture, there is no separation between your personal assets and business assets. In the eyes of the law, you and your spouse are your business. In contrast, an LLC is a separate legal entity from its owners, so it provides liability protection in case the business faces a lawsuit or defaults on a debt. Okay, that way, if someone sues your LLC, they can go after your business assets, but not your personal assets. But with an unincorporated QJV, qualified joint venture, you risk losing things like your house or car if your business gets sued. Thank you so much for your attention. Let me quickly do a recap here. So I was just explaining to you how a husband and wife can form an LLC. I gave you the overview. And then I really spoke to you briefly about the tax implications of the whole arrangement, and also talked a little bit about single member LLC as well as community property states. Thank you so much. God bless you. I'll speak to you another time. Until then, remember, stay marvelous.